Welcome back. And so we start off by checking on the economy as it affects you, as it affects everyone. And specifically, we're looking at the CBN's increase of CBN's Monetary Policy Committee increasing interest rate to 27.2%. And joining us to have this conversation this morning, we have Mr. Omisakin. He's a chief economist, Nigeria Economic Summit Group, who joins us in our Lagos studio here. Good morning and welcome, Mr. Omisakin. We also have joining us via Zoom, Mr. Kelvin Emmanuel, who is an economist also. Good morning and welcome, Mr. Emmanuel.
Good morning. Thank you so much for having me.
Yes, it's good to have you. So I'm going to start with Mr. Omisakin in the studio. So, this came as a surprise to economists who thought that, the CBN's NPC will slow down or pause at least the increase in interest rate, particularly with the minimal progress witnessed in inflation. So did this come as a surprise to you?
No. As a matter of fact, if you look at the success or the progress we've recorded in inflation rate, for me, I think that will be a kind of an incentive for the CBN to continue that trend. It is, MPR and the activities of CBN is within the overall macro environment. And so the CBN has its own mandate, which is purely around output and inflation. What happens outside of that cannot be within the purview of CBN. So I personally think that while the implications of increasing the rate, especially in this time where we have huge macro instability, is huge, but for me, I think this is still the best thing the CBN could do, especially at this very moment.
But when you consider that inflation has slowed, and in fact the CBN, amongst its many considerations, the governor spoke about it, don't you think that the progress that had been achieved in the last 2 months was enough for the CBN to now say, okay, perhaps we could reduce the measure of increase of the interest rate?
No, if you look at the general macro environment, you will know that though we have the inflation rate seems to be coming down, but the level is still extremely high. We are doing 32.2. That is not a huge success. So the CBN, as far as I'm concerned, will see that instrument of MPR as very, very important in bringing down the rate. And you look at it, it's not just about the inflation rate. The impact of inflation rate on the economy is more devastating when you compare that with what you have with the interest rate, right? So I think the CBN is on the right path, but it's unfortunate that on the macro side, there is no story. You can tell anybody anywhere, business environments and the rest, there's no story. So I think I will expect more actions from the fiscal side. If we leave the CBN as though they are the manager of the economy, we're going to run into this situation. We're going to have rates increasing every time, but the implication will also be very, very huge. So I think I expect more from the from the fiscal side in complementing what the CBN is doing. But the CBN is fixed. There is nothing you can do, especially at this moment, than making sure that you arrest inflation. We don't have enough production. Our productivity is weak, is low. We don't even have clarity as to what we're going to do to fool the inflation. So the CBN has no other option than to make sure that they continue increasing the rate, at least for the medium term, to sustain the minimum level of inflation.
All right. Let me take it to Mr. Emmanuel. I want you to also speak to the same issue specifically tell us whether the benefits outweigh the odds and the gains recorded also in the last 2 months. Is it really as a result of the increase of interest rates by the CBN's NPC over a period of 2 months, or more as a result of the fortuitous harvests that the country witnessed in the last few months as well?
Well, first of all, I have to tell you that I was expecting that the members of the NPC were going to vote to hold and not to increase. The slowdown we've had in the increase in the rate of inflation 2 months consecutively, owing to 22 straight months of increase in inflation from 2022, is a myriad of factors. The harvest season has come. The 150-day waiver for food imports is beginning to kick in. And then you have, of course, some gains from like the inflation to interest yield curve alignment from increasing NPR, that are seeing a lot of banks, especially, for example, GT Bank. Shegun Agbaje was speaking about the 6 months ending June 2024 and talked about fair value gains on loans that are open and has pendency on it because, after every interest rate decision by the Monetary Policy Committee, banks are obligated to, within 10 days after the decision, to send a communication to their clients that are owing them money that there's been a change in interest rate. For example, in America, with the FOMC, you can see there was a 50 basis point cut. The banks in the US that are in consumer banking, because in America has a Glass-Steagall Act that separates investment banks.
When politics enters. The point is that we are not in a state where economics can actually work for us.
That's textbook.
Yeah, we are not in that current state now. We need to stabilize the system. And that's why the conversation must go beyond what the CBN does, what the fiscal side does, and we need to stabilize. We are badly heated, as in we are in a state where, just like he said, we have so many shocks in the system. Even when you reduce the NPR rate, that does not convert to having a reduced unemployment rate. We move from 4% to 5.2%. Just because it's below what people call natural rate of unemployment, still means that we are moving, right? So I think the challenge we have is this: there are trade-offs. You cannot eat your cake and still have it. These are simple trade-offs. And when you ask the CBN what the CBN could do, I believe so strongly what the CBN could do is what it's doing. The CBN cannot do beyond what we have now. I think we need to be having a better conversations around what the coordinating minister of the economy is doing. What is the state of our fiscal revenue? What are the plannings on a medium, MTNDP, medium-term national planning? How do we want to stabilize the system? And I think that's one of the reasons. This is one of the contexts why the Nigerian Economy Summit Group is coming up with this year's summit that focused on collaborative actions on growth, competitiveness, and stability. You can't achieve growth, competitiveness, and stability without some trade-offs, and they are obvious. You're going to have some moments of unemployment rate going up, but if we look, if we don't focus on what is important as at now, we keep going in that path. Let me tell you what is happening now concerning our output, our GDP. That we are weak in terms of productivity is obvious. We all know that. But currently, about 68% of the sectors of the contributions to GDP is driven by sectors who are currently doing below 5%. Those are sectors that are dragging the economy. And much more sectors who are doing below 0%, who are in the recession. And collectively, they contribute about 68% to GDP. So you have just the oil and gas that's coming up of recent, and finance contributing about maybe 30.1% to GDP. This is a bigger conversation. It doesn't matter how much we do with our, interventions there and there. If the elephant in the room is still as weak as we are experiencing now, we have a long way to go, and that is the focus of stabilizing the economy. We need to handle issues around competitiveness, the high cost of production, which we've talked to, interest rate increasing, inflation here and there. We need to talk about what are we doing with the production of our crude oil. Yes, we are doing relatively better now, but the conversation must look at the bigger picture. If we continue like this, I don't see us having a sustained growth that we've had now. We are doing 3.1, 3.2, H1 3.1 on the average. I don't see us continuing that trend. And so for me, my fear is that we seem not to be looking at what is happening at the fiscal side. And for me, that is where the magic lies. As I have said also, that is where the magic lies, the liquidity issue and so many other things. It will be done in such a way that nobody will really care about what the CBN is doing. In fact, the CBN will not have that incentive to always want to increase MPR if the other side is playing the game well. But now CBN is assumed to be looking at the whole responsibility as his, and so it's coming out big to arrest the situation. So I think that's where the conversation lies, beyond what the CBN is doing currently, and that speaks to the unemployment rate you have mentioned earlier.
And I wonder if those trade-offs are worth the all-important goal of economic stability, because of the continuing lack of productivity that you have consistently touched on in your commentary. And that's why I want us to go again to the fiscal side. In talking about the considerations yesterday, the CBN governor says the committee recognizes the need to continue to work with fiscal authorities to bring down energy prices that are powering food inflation. And he also talked about, noting that release of FAC allocation increases the cash liquidity in banks and also has an impact on the exchange rate. And Mr. Emmanuel, touched on that earlier on. So I'm coming to you now. What does this say about what subnationals are doing when FAC allocation is increased? And does it have also perhaps a correlation with the lack of productivity in states? Because the economy is not just at the federal government level. The economy is in all the states of the federation as well. And does it also have an impact in continuing increase in unemployment that we also see in states as well?
Yeah, a very important question you asked, and the economy is not just at the federal level, but the federal level is what determines inflation. And if you look at the formula for calculating GDP, you have consumption or consumer spending, you have investment, you have government spending, you have net exports. What has improved basically is consumer spending has dropped because of purchasing power parity. Investments, what you have are the FPIs coming in because of the MTB stop limits. The increase in interest rates again is going to raise the MTB stop limits up for all kinds of government debt and security. Government spending has not been fantastic because of the fact that debt servicing and under other ancillary costs that does not speak to actual impact on the people when you look at the budget, because the cost of debt servicing, and the how do I put it? I'll put it this way. So the government tells you that they no longer have subsidy, yeah, but NNPC has not remitted anything to the federation account since January. The monies NNPC is supposed to remit to the federation account is using to defray the cost of subsidy, including the NLNG dividends that I always tell people they seized, because constitutionally they don't have the power to seize it. That money is supposed to go to federation account. The federation account doesn't get enough revenue, tax to GDP ratio, non-tax to GDP ratio. They end up borrowing money, which is one of the reasons, for example, that I can see why the MPC will decide to raise the cash reserve ratio, because CBN has announced that they will resume overdraft of 5% based on the Ways and Means Section 38 of the CBN Act as a way to augment deficits in the budget. Then you have net export. Net exports has improved because, for example, the Dangote refinery and quite a number of other companies taking advantage of weak exchange rates. Yeah, but what has gone down is government spending. Investment has not been fantastic, especially non-speculative, long-term patient capital coming into Nigeria because of the macros. In 2025, we're expecting one or two IOCs, like, for example, we're expecting ExxonMobil to announce FID for oil and gas projects in deep water. When one or two other companies are coming on stream with investments. So we'll see how that goes in 2025. But back to your point about states, there are critical factors that the federal government controls. And if the government does not do anything about stabilizing those macros, there isn't much the states can do. But yes, the governors have an obligation because, the CBN governor talked about how there's a link between FAC allocation and weak exchange rate at the end of every month when this thing is announced. I think it goes down to the anti-corruption agencies, and how they can manage that. And why you have so much dollar supply outside of official channels in Nigeria. It's an anomaly. Nigeria is one of the countries where you have dollar flowing freely in the black market. You don't see it anywhere. Anytime I go to South Africa, the government tells you that after 90 days, if you don't convert your foreign currencies you brought into the economy in cash into South Africa, and they will force you to convert it. Yeah, same in other countries I go to. It's an anomaly that you live in a country where there's so much millions of dollars flow in the black market. It just doesn't make any sense, And the state governors also has a lot to do, considering their FAC allocation has increased, with empowering their people and with creating jobs, not just building roads and flyovers, bridges, creating actual jobs for their people, giving out SME loans, and creating farm access roads, giving out farm inputs. Food inflation is very high, over 40%. Agriculture is one major state for state governors to focus on. And for me, I think the way to create intervention in the states for them is to create farm access roads, give out monies to cooperatives, give them loans, give them inputs, give them fertilizer, give them seeds, bring in tractors. That's the way to create impact. That will bring food inflation down. And food inflation is a major problem. Unfortunately, I don't think this can happen in all the states because, the North has a serious security issue, and especially in the Northwest and some parts of the Northeast. I think the security issues they have has to do a lot with illegal mining of gold. So that comes back to the federal government.
Interesting point you made there, and I'd like Mr. Omisakin to also speak to it about whether he agrees with you or not that the federal government has an impact on the macro to determine how the states, the subnationals, will also deal with the issues in their state. Mr. Omisakin.
Yeah, of course, I agree with that. Most of the policy instruments that will stabilize the economy, within the purview of the federal government. Even though I understand also that the economics of subnational in Nigeria is near zero. You don't have any conversation as to how the individual states are contributing to the national narratives. You don't have that, and for me, I think it's still part of the bigger conversation that we need to have. If you look at the structure of the Nigerian economy, in terms of the spatial structure, you understand that most of the states are like off the radar. You have huge money, in fact, money entering the state, but there is nothing they use the money to do productively, except to pay maybe 70% of the money for the workers in the state, and then they have something, and then it's gone. Go to different states in different part of the country. So, but I still believe that the federal government has what it takes to direct. For instance, we're talking about MPR. That's from the federal government. I believe the federal government has the ability to sit down first and to look at where do we go first. One of the challenges I'm seeing now is the noises around what type of policy do we take, when do we take it, and when would they be manifested in terms of the results. Now, let me tell you something. A policy can look very good and interesting and promising, but if it's taken at the wrong time, everything will look very complex. I would expect the government to finalize this deal around the subsidy removal. It's painful, quite well. It's painful, but I think the economics of it also suggests that if you remove, we have about 40% or 42% of demand for FX from oil, PMS. So if the federal government sees to that and remove completely the subsidy, it will give the federal government the ability to harness or take care of that 40% of our FX, which is one of the major crises we are facing now. And that is one. That will be painful. But you can't do that when you don't think through the whole process of your policy interaction. You can't remove this and then the next day you are removing that, and then everything looks very complex. So what I expect from the side of the government is to have a bigger picture as to what needs to be done with our policy synchronization. We don't really have any big conversations around that. Number one, currently this MBS, Nigerian Bureau of Statistics, will be releasing different data around rebasing. You have the GDP rebase, CPI, the same inflation we're talking about now. And you have the national labor survey, or living standard survey coming up. And this will change the whole conversation
so
we are having now.
All those figures will be coming down.
Will be coming, no, as in the report will be coming up.
And I'm saying rebasing will mean that the figures, because unemployment used to be...
Okay, so for instance, if you rebase the GDP now, we assume now that you have a bigger size.
Okay, so for GDP will increase.
Yeah, because
for unemployment, I'm just saying that it will look like we're in a good position when the rebase happens.
No, it depends on which indicator you are looking at.
Okay, so unemployment, for example, when we rebased or changed the methodology, it came down. By the way, they didn't release the one for Q4 last year. All we saw was Q3 last year, now Q1
I think they promised to do that now. So how? I think they promised to do that. So I mean, for instance, if you have, and you are right, you have some indicator that will suggest like we are doing. For instance, what's it called now? Our debt to GDP, any rate along GDP will look better, right? It will be, maybe we are doing around 49 or 50% now. Then when the GDP increases, we'll likely be doing something like maybe 30 something or 40. And that might give the government the idea to always want to increase. So that in itself is a bigger challenge to planning. So there is a need for strategy from the policy side that will make use of the updates we are having from the data. So if we bury our heads into discussing NPR, and now we have all this update, boom,
you might get lost. And this is my real question, pardon me, Bukola.
Yeah.
Now, when you talked about FX now, I wonder if Nigerians are really ready for the removal of subsidy in that way that a lot of people think about it. Just when recently now the price of petrol increased, you see how much it has increased the burden on Nigerians. And I think that there will be a lot of demand for FX if we are importing the refined product. But if we're producing locally with Dangote and the Port Harcourt refinery, I want to imagine that we will not be using FX to buy petrol from them, since we have the Naira
liquidity we improve from that side.
I'm still sticking to this subsidy removal bit, whether we should go the whole hog or still try to understand that people are struggling and do it bit by bit. I know economists don't want to hear that.
No, we are all people.
For economists, just remove this thing once and for all. But we see how people are groaning. There's a CNG bit which is not as fast as we expected to. And so people convert to CNG and they're still charging the same price as though they were buying petrol, right? But my question is this, as we begin to wind down for both of you, the short-term interventions. Because you said that you can't remove one thing and also remove another, and then you leave businesses and people wondering, how do we breathe, right? When we're meant to let the poor breathe. So what are those short-term measures? You talked about some sectors that contribute to the GDP. There are a lot of them, but they are not contributing as much as they ought to. So maybe need to focus on them and pump something into them. I don't know what that is, but for both of you, Mr. Emmanuel and Mr. Omisakin, short-term interventions for businesses. I don't know if Mr. Emmanuel wants to go first, so we can come to Mr. Omisakin. Short-term interventions, please.
Well, short-term interventions, to be honest with you, there are no easy solutions to the problem. This is because, look, Kayode, I don't subscribe to firefighting or band-aids. I like hard work, heavy lifting. Let's tackle it from the roots.
But that's you, Mr. Emmanuel. You know, you're a big man. But for the average Nigerian, maybe they like that, something to just keep them. A lot of them live from hand to mouth, you know.
We're going around in circles. You see, this talk about consumer loans, one of the reasons why the banks in Nigeria don't like consumer loans is because you don't have big data infrastructure that helps banks to do what they call origination and discovery. You know, that's why there is a lot of collateralization of fiscal assets for lending in Nigeria. You know, banks a lot of times are blind when it comes to small businesses. So they are not able to offer credit because they don't understand the history of the businesses. A lot of times they don't have access to their financials. There is no corporate governance. These are the problems that you have to deal with from an institutional level. Inflation is high, so interest rate is high. So if you tell the government, if you say the government should give you single-digit loan, somebody is going to have to pay for the difference. Government is going to have to pay for the difference of maybe 23% or 22% for giving you 9% loan. Where is it going to come from? You know, so when we say short-term interventions, it's firefighting and it's band-aid. Okay, about your question, very important question you asked on subsidy. I think before we even start to interrogate subsidy removal, we have to really ask ourselves, do we actually consume 55 million liters of PMS a day? That's the first question, because that's the basis for under-recovery. Yeah, Nigeria's true north for daily consumption is not above 35 million liters, because between 2002, when it was 21 million liters, and 2009, you had a compound average growth rate of 11%. You can't tell me that went up 234% between 2009 and 2024 without any data or empirical evidence to back it. Okay, so if you interrogate the actual daily consumption of petrol in Nigeria, you begin to, decouple how much do we actually need to pay subsidy, number one. Number two, if we remove subsidy, what is the actual landing price of PMS? And number three, do we actually need to import petrol? No, we don't need to import petrol because we have a brand new refinery in Lagos that can deliver 25 million liters of PMS daily and is ramping up, and at full capacity will be able to produce 52 million liters of PMS. I expect that by the end of Q4 of 2024, the Dangote refinery will have ramped up to about 90% capacity utilization. I think right now it can deliver over 30 million liters of PMS on a daily basis. The question is, does the government actually have the wherewithal to take it? Do they have the cash? If they don't have the cash and they have to do an LC, at what finance cost are they raising the LC to be able to pay? What is the offshore Lagos price? What is the ex-refinery price? And what is the actual landing price after distribution and margins has been added for PMS? These are the questions we have to interrogate, for us to understand what our true level is, for PMS in Nigeria.
Fantastic point there, and we await those figures. It's important to be transparent. Mr. Omisakin, your final words on this.
Very, very simple. We must understand the current state, and we also need to understand the challenges we've been facing with short-term or in fact interventions. The most important approach I want to advise is that borders on sectoral intervention, specific sectoral intervention, and that is agriculture. Agric intervention to improve productivity and efficiency will help the issues around inflation and interest rates. Inflation today is like saying agric products price, as simple as that. Yes, we know we have the power, the electricity and so many energy stuff, but it's mainly food. So the short term for me is just sectoral intervention, agric most importantly. Any other intervention might not work in terms of what do you want to do with businesses. It's cool to say that, but how do you do it? We don't have data, I said, we don't have the data framework to do that. Before you know, the next year you'll be hearing that so many has embezzled so. So the best thing to do is to make sure that we address this food inflation. And that is why the people comes. People may not really talk when the prices of fuel is so high, but they have something to eat. It's because we have so many things going on at the same time. That's why people are crying. So for me, agric intervention is very important at the immediate for us to move ahead with.
And the curious thing is that it's a committee of economists like you, like Mr. Emmanuel, and we really hope that they listen in on these conversations and it informs their decisions. Perhaps at the next meeting.
I think they are all listening. It's just that it's not that easy when to govern this.
They are listening, but they do not agree, evidently. But we'd like to thank you very much, Mr. Olusegun Omisakin, I'm correct, and Mr. Kelvin Emmanuel. Thank you so much for your time on the program.
Thank you.
So when we return from this break, we'll be looking at rates yet again, but this time at another sector that affects you one way or the other. So stay with us, we'll be right back.